The electric car maker delivering nearly 185,000 cars globally versus about the 178,000 expected, according to Refinitiv. For more on Tesla's blowout sales and the future of EVs, let's bring in Tim Higgins, auto and tech reporter for the Wall Street Journal and a CNBC contributor. Auto reporter Phil LeBeau joining us as well. Tim, the market is cheering these numbers. The stock is up. We have Wedbush Securities upgrading shares to an outperform with a price target of $1,000. I mean, how significant are these delivery numbers?
Well, it's a big win, in part because the first quarter has traditionally been a tough one, the weakest one for Tesla, and they have a long history of really disappointing. And when you look at the Tesla stock, it's really about growth, the growth story, and there's so much attention to it that, in the last few months, there've been a lot of people looking for signs that maybe that growth story had hit some bumps. And so coming out of the quarter with such a huge number will kind of reassure investors for the rest of the year that potentially those huge growth targets that Elon Musk is targeting are potentially going to happen.
Yeah, Phil, the fact that these record delivery numbers are coming in the face of chip shortages, which we know have really challenged the auto sector. What do you make of it?
Two things that Tesla did correctly in this quarter when you look at the first quarter, Seema. First of all, you mentioned the chip shortage. They had to weather this. They had a little bit of an impact in terms of production out in California, but not nearly to the extent that we've seen from other automakers. And the second move that they made was to de-emphasize building the Model S and the Model X. Now, those are not huge volumes relative to the Model 3 and Model Y, but Tesla correctly said, look, let's emphasize the Model 3 and the Model Y, especially in China, which is the world's largest market for electric vehicles. Those are two reasons why Tesla was able to do better than expected when it comes to deliveries in the first quarter.
Tim, we've been looking through this Biden's infrastructure package proposed last week and trying to figure out what it means for the electric car industry. Your thoughts on how big of a boon this could be for Tesla and its competitors?
Well, anytime you should get more charging stations, that would be helpful for any electric car company. Tesla, part of the reason that they have built such a loyal base out there is because they have these supercharger network around the country where it's easy for somebody to kind of top up the charge if they need it. Though most people use their home charger to fill these cars. So anytime you can get that infrastructure out there and they don't have to pay for it, that's probably a good thing. It also helps build interest in electric cars, which helps them as well.
Phil, which other manufacturer is in the race to dominate the electric vehicle world? We had a guest on in the last hour who said GM is one of them. I assume Audi may be another one. The German car makers as well, Volkswagen.
Volkswagen,
maybe.
yeah.
Who's
really
who's
what
next
you're looking
in
at,
line?
Tyler? What you're looking at in terms of, let's just look at the top three in terms of pure electric vehicle sales last year. I'm not talking about hybrids. I'm not talking about gas electric hybrid vehicles. I'm talking about pure electric vehicles. Number 2 on the list is SAIC out of China. Not a surprise given the growth of EVs and the government pushing EVs in China. And number 3 is Volkswagen. And Volkswagen has already laid out their plans and they're rolling out the ID4 new models. Their sales in Europe are increasing substantially. So you've got those two along with General Motors. Now, the issue with General Motors is that they have invested a lot. They have laid out a game plan, but you're not going to see a big increase in the number of models from General Motors for a couple of years yet. We'll start to see with the Cadillac Lyriq later this year, and then you've got to wait a little bit before you really start to see the big push in terms of the number of EVs coming to market. But those are really the 4 that people are looking at right now and saying, look, they stand head and shoulders above everybody else at this point.
One of the things that occurs to me, Tim, is the idea that in Tesla is fully, and maybe SAIC, as Phil says, totally committed to electric vehicle manufacture. But these other companies have legacy brands and legacy automobiles that may make the internal transition to all electric harder to do, as they know that in doing so, they're losing sales on the other side of their brands.
Absolutely. And that's been one of the arguments that Elon Musk has made over the years, is that he's all in on electric.
Right.
They've burned the bridge. There's nothing to go back to. They don't have anything else. They're going to do electric. And that's, we've seen the challenge with traditional automakers. They only have so much money to invest in that future product. And there's a real incentive to say, hey, we're making the money on the SUVs and the gas-powered SUVs and trucks. Let's keep doing that. Yet, these electric cars, they're not high sellers. It's unclear if customers really want them. And what's happened now in the last year or so is because of the success of Tesla stock, these bigger traditional automakers are really just getting hammered with questions of, where are you in the future? Where's your electric vehicles? And so you see companies like Volkswagen and GM really talking about how they are all in, or they're going to be all in on electric cars here. And still, they've got these gas cars, but they want to talk about electric cars.
All right. Well, we're looking at Tesla up today, but still down about 8% this year. Tim Higgins and Phil LeBeau, thanks for joining us today.
And the Dow soaring directly